Welcome back to Finance 3.0, the channel dedicated to helping you understand not just where finance is today, but where it's heading tomorrow. I'm Asha Semenova, and today we're diving into what I believe is one of the most critical topics shaping our financial future, the showdown between central bank digital currencies and Bitcoin. For months, we've heard the chatter about CBDCs, central bank digital currencies. Nations all over the world are exploring them. China, the US, the UK, they're all looking at this technology, but what exactly are they and why are they a big deal? A CBDC is, at its core, a digital version of your country's currency, like the digital dollar or the digital yuan, issued and backed by the central bank. Think of it as a direct liability of the central bank, just like the physical cash in your wallet. The goal is to bring the safety and stability of a government-backed currency into the digital age. This is a fundamental shift from our current system, where most of the money we use is held as a liability of private commercial banks. There are two main types of CBDCs being considered. First, you have the wholesale CBDC, which is primarily for interbank use. It's meant to make large-scale transactions between financial institutions faster and more efficient. The second type, and the one we'll be focusing on today, is the retail CBDC. This would be available to the general public, allowing you or forcing you and I to have an account directly with the central bank. So, why are central banks so interested in this? There are three main arguments proponents are making. First, financial inclusion. Globally, billions of people are unbanked or underbanked. A CBDC could provide a direct, low-cost way for them to access financial services without needing a traditional bank account. Imagine a digital wallet tied directly to the central bank. Second, payment efficiency. Our current payment systems, especially for cross-border transactions, can be slow and expensive. A CBDC could enable real-time gross settlement, making payments instantaneous and cheaper, whether they're local or international. And third, monetary sovereignty. The rise of private cryptocurrencies has challenged the monopoly of central banks over money. A CBDC is seen as a way for governments to maintain control and protect the stability of their currency in a rapidly digitalizing world. It's a way for them to say, we will provide a safe, stable, and government-backed digital currency, so you don't have to rely on private, volatile alternatives. Now, let's talk about the other side of this story. How does the world of Bitcoin and decentralized finance, or DEFI, view this? For many, the very existence of a CBDC is a confirmation of their core thesis. It proves that the traditional financial system is struggling to adapt and is now attempting to build a centralized digital version of its old, flawed model. The core philosophy of Bitcoin is decentralization. It was created as a direct response to the kind of centralized power that CBDCs embody. Bitcoin gives power back to the individual, allowing peer-to-peer transactions without the need for a third-party intermediary or a central authority. It's a censorship-resistant, permissionless system. And within the broader DeFi ecosystem, the entire premise is to create a parallel financial system that is open, transparent, and built on code, not on a centralized power structure. DeFi applications like decentralized exchanges, lending protocols, and stablecoins are designed to operate without the need for a bank or a government. The showdown, key differences, and conflicts. This is where the real conflict lies. It's a fundamental ideological battle, not just a technological one. Let's break down the key points of friction. First, privacy. A retail CBDC, by its very nature, would give a central bank a direct line of sight into every transaction you make. This could be used to prevent illicit activity, but it also opens the door to potential surveillance and a total lack of financial privacy. Bitcoin, on the other hand, is built on a pseudo-anonymous blockchain. While transactions are public, your identity is not directly tied to them unless you choose to reveal it. Second, censorship resistance. Because a CBDC is centralized, the central bank would have the power to freeze, confiscate, or otherwise block your funds. We've seen examples of this with political protesters or in response to international sanctions. In the world of Bitcoin and DeFi, because there is no central authority, your funds cannot be censored or frozen by a single entity. It's a peer-to-peer network where you are in full control of your private keys. Third, monetary policy. A CBDC gives central banks unprecedented control over monetary policy. They could potentially program a currency to have an expiration date, or they could directly apply a negative interest rate to your digital wallet to encourage spending. The possibilities and the risks are immense. Bitcoin's monetary policy, however, is fixed and immutable. It's hard-coded into its protocol. There will only ever be 21 million Bitcoin, and its issuance schedule is transparent and predictable. It's a system built to resist inflation and political manipulation. The case for coexistence. So, with all these differences, will a CBDC kill Bitcoin? My short answer is no, and here's why. These two technologies are designed for fundamentally different purposes. A CBDC is an attempt to modernize the existing financial system from the top down. It is for people who want the convenience of digital money, but also the safety and stability of a government-backed asset. It is a new payment rail for the established system. Bitcoin, on the other hand, is a tool for those who do not trust the existing system. It's for those who prioritize decentralization, censorship resistance, and a fixed monetary supply. It's a tool for personal sovereignty in an increasingly digital world. The rise of CBDCs, in my opinion, actually validates the need for a non-sovereign digital asset like Bitcoin. The more governments push for centralized, controllable digital money, the more people who value privacy and freedom will seek out alternatives. Bitcoin isn't just a speculative asset, it's a statement. A CBDC is also a statement about control. They will likely coexist, serving different needs for different people. The future of money is not one-dimensional. It's a complex, multi-layered ecosystem where centralized, government-backed currencies and decentralized, peer-to-peer digital assets will all have a place. The key is to understand the differences, the trade-offs, and to know what you value most. I want to hear what you think. Do you believe a CBDC is a necessary evolution of our financial system, or is it a step towards an over-monitored, over-controlled future? Let me know in the comments below, and if you want to stay ahead of the curve, make sure you hit that subscribe button and turn on notifications so you don't miss our next deep dive. I'm Asha Semenova, thanks for watching, and I'll see you next time.